Hello, this is the Tradesight U.S. Stocks, Futures, and Forex Market Preview and International Economic Data Roadmap for the week beginning Sunday, the 14th of February 2021. Happy Valentine's Day, ending Friday the 12th. I say it starts Sunday. It doesn't really start Sunday this week because we have a bank holiday here in the U.S. on Monday, which means that banks and the U.S. stocks and futures markets will be closed due to the President's Day holiday. So it's a short week, starts Tuesday. Everybody's out of town for their ski trips or whatever, if they feel comfortable right now. Here's a look at the dollar index daily chart, sitting right where it was at the end of the year, and we're at the beginning of December. So we're 2 months plus at the same level, not doing a whole heck of a lot. We'll look at the Forex pairs anyways. Forex has been really dead. Here's the euro dollar. Looks like the inverse of the dollar index like usual. Here's the pound dollar. Did move up a little bit. We had 2 nights where we couldn't even make calls this week because the level spacing was so bad. But we had 1 night with winner, so good for that. Aussie dollar here, 13 sell signal on the daily chart of the Aussie now, so something to keep an eye on. Euro yen dead flat, and it has a 13 sell signal in place. Pound yen, it's been moving up a bit. The pound Swiss, not much here. Now, when we look at the intra-week action, so the 30-minute candles, high to low for the week on the euro dollar was only 120 pips for the week, and really that move was Tuesday. Like if you look from Tuesday afternoon all the way till Friday's close, we stuck in a 60 pip range for 3.5 days. That is horrible. The pound dollar, on the other hand, high to low was about 180 pips. That's still not great. And as you can see, the chances were more on Monday and Tuesday. Wednesday, Thursday, and even Friday were pretty darn flat, so it wasn't very exciting. We made a little money on Friday as well, by the way, though. All right. So that's it for Forex. There's not a lot to say. Once again, let's move on to the stock market. Here's the ES front month futures contract, the daily chart of the broad market and futures form, and as usual, a new closing high here on this. Now, I will tell you that we have now completed a 9-bar startup phase. So oftentimes that can be a pause point, but the seeker count will begin. That doesn't mean we'll get to a new seeker. Obviously, it can be recycled as it has been the last 2 times, but anything is possible. So that's still a long ways off on the daily chart. While we're here, let's take a look at the weekly and the monthly. Start with the monthly. This also is going to complete. If this was the end of February, we would have a 9-bar startup phase complete on this. And again, doesn't mean we always lead to a 13, but a lot of times the 9 itself is the pause point. And if I look at the weekly, this one's underway on a count, so now it's 6 up. So the weekly is getting closer to an actual signal if we get there than any of the other time frames. Let's go through the major daily charts. Crude oil up $1.49 on Friday, 59.73. So oil coming back as the economy starts to churn again. Gold down $2. S&P cash gains $18.45. Nasdaq 100 is up 73.34. SOX is up 39. That's a new closing high on the SOX. Biotech's up 26.38. The Russell 2000 up 4. The VIX down $1.28. This is finally trying to break that red static trend line. So this is interesting. This will be a low. I mean, if you just get under a little bit lower, you're going to break that. Now we closed below it. So if we take out the low of that candle on Tuesday, then for the first time we have destroyed this static trend line, and it's been a while. And so we'll see. We'll see what that means. We'll get the VIX back in the teens. That's not good for action in the stock market. But what I like it for is ultimately when the VIX gets down the teens, it gets a lot more interesting to play the quarterly options on it at certain key moments. We had that pop in the VIX from 24 or so for 23 to 36 a couple weeks ago. That's the type of pop I like to look for when you're breaking that downward triangle. But because we're starting in the 20s, it's not as interesting. So we'll see where we get to. The trend closes at 0.63. That's very low. Puts the 10-day at 1.06, which is not a signal. However, we are going to drop off some high numbers here on the next couple of days. So if we get more low readings, that moving average is going to drop quick. And remember, when you get the moving average under about 0.85, that's a sell signal. On the broad market, Nasdaq volume, 7.4 billion shares. We've had a week of strong volume. I think overall, if you add this up, if you add up the last 5 days, I think that's the biggest volume week in the history of the stock market by a lot. So keep that in mind. Advanced decline ratio on the Nasdaq it was plus 513, puts the 10-day pretty strong as well. New ground there. Advanced decline ratio on the New York plus 339. Google was up $6.28. It's kind of a blip for Google. Apple up 24 cents, also mostly a blip. Netflix was down $1.07. This thing's gone nowhere in a while. Amazon up 15. That's a blip. Still hasn't gone anywhere in a while. Tesla up $4.46. Facebook gains 11 cents. That's a blip there. Also hasn't gone anywhere for 6 months. Zoom up 34 cents. It was a very quiet Friday. Very unfortunate quiet Friday. Thank God for Rich's AMAT. We made some money on. Otherwise, it would have been a real bust. Goldman Sachs approaching the all-time highs. Could be a breakout there. We'll see. TLT, the 20-year bond ETF down $1.85. So that's new lows on the bonds. The Dow up just 27 points. Bitcoin now sitting at 48,495. Just made a new high a few hours ago. Remember, it trades 24/7. Put call ratio closed at 0.55. We had a real low reading on the put call ratio this week, which is also concerning for the markets in general. All right, so let's flip over, look at the intra-week action, 10-minute candles, so you can see the whole week. And, you know, again, this was a really horrible trading week, unfortunately. And I'm going to say, if we go back the week before, at least there was some movement. You know, that looked better. But this is just a lot of not tradable action here. So we gapped up Monday and basically dead flat. We were basically closing where we opened until the last candle. On Tuesday, dead flat open, or small gap down, filled, closed inside the last candle of the last day again. Wednesday, we gapped up. There was this sudden plunge that I don't know that we ever really identified what the news was. But the funny thing about that plunge, if you take a look at it carefully, is the low of that candle takes us all the way back and fills the gap from Friday night to Monday morning, right? So, as we always say, 80% of gaps fill the same day, 95% fill within a week. Well, that took care of that gap just on that spike, and then we kind of drifted back up, ended up about where we had closed the day before. That was where we thought there might be some excitement starting for the week when we started to have that move down, but it only lasted 20 minutes or so. Thursday, small gap up, filled, dipped later in the day, came back up, and closed just under where we started. And then on Friday, small gap down, filled, and then it was dead day all day. I mean, and if you look at Tuesday, Wednesday, Thursday, I mean, they're basically, most of Friday, they're in the same range, going nowhere, and then all of a sudden Friday, the last 30 minutes, it takes off a little bit of maybe short squeeze for the weekend. So kind of a weird week from that perspective. When you look at the Nasdaq, you know, pretty much the same thing, that late move, but it's just so flat, so choppy, no consistency, not what we like to see, and this is where you got to be picky. And if you don't do anything, that's fine. And we just got to make sure that we're waiting and keeping our powder dry for, you know, whatever may come, because this is not interesting. All right, in terms of economic data for the week ahead, and again, remember, short week here in the U.S. On Sunday, we got preliminary GDP out of Japan and a bank holiday out of China. Right move housing price index out of the U.K. Revised industrial production out of Japan. Monday, we got industrial production and trade balance out of Europe. Bank holiday, like I said, manufacturing sales out of Canada. Visitor arrivals out of New Zealand. Bank holiday for 2 days then out of China. Actually, 3 days. It keeps going. Monetary policy meeting minutes out of Australia. Tertiary industry activity out of Japan. Italian trade balance, flash employment change, flash GDP, zoo economic sentiment out of Europe. The foreign securities purchases out of Canada, Empire State Manufacturing Index here in the U.S., CB Leading Index, GDT Price Index out of New Zealand, CB Leading Index out of Australia, the first one was out of the UK, Tick Long-Term Purchases out of the U.S., MI Leading Index out of Australia at 6:30 p.m. Eastern Time, Core Machinery Orders and Trade Balance out of Japan. Then we go to UK overnight, 2 a.m. here in the Eastern Time, CPI, PPI, and RPI. I love how they put all their inflationary numbers together. Then the housing price index at 4:30 there. German 30-year bond auction. Now here we've got CPI out of Canada. We've got retail sales and core PPI here in the U.S. Capacity utilization and industrial production at 9:15. Business inventories, NAHB housing market index. We got the minutes from the last Fed meeting here at 2 p.m. The unemployment rate and the employment change out of Australia that night. Going into, so China has a 2-day week. They just go on Thursday and Friday. Swiss trade balance, Europe ECB monetary policy meeting accounts, ADP non-farm employment change out of Canada, NHPI out of Canada, Philly Fed manufacturing index out of the U.S., unemployment claims, building permits, housing starts, import prices, consumer confidence out of Europe, natty gas out of the U.S., crude oil inventories out of the U.S. Again, because of the holiday, they packed them both into the same day on Thursday. PPI out of New Zealand, flash manufacturing and services PMI numbers out of Australia, national core CPI out of Japan, consumer confidence out of the UK, retail sales out of Australia, flash manufacturing PMI out of Japan. Did I already say that one? No. German PPI, retail sales out of the UK, public sector net borrowing out of the UK. These are on Friday now. And then we get the CPI out of France, and then flash services and manufacturing PMI numbers out of France, Germany, the broad European sector, the UK, current account out of Europe, retail sales out of Canada now on Friday, and flash manufacturing and services PMI numbers here in the US, along with our existing home sales at 10 a.m. So there's your week. I wouldn't say anything major is coming out for us. And again, it's a short week. We'll see what that means. The week after is options expiration, but this is not a triple expiration month, so we don't have to worry about that. And we'll see what we get. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading short week.